Hey friends, I'm so excited. I have 5 positions that I want to share today. They're on the whiteboard. 3 of them are qualified dividend-paying stocks. 2 of them are ETFs, exchange-traded funds. The second one is really going to shock all of you. This is my buy list right now. Because with dividends, anything is possible. Like the vacation that I experienced last week with my family. We went to Orlando, Florida. We went to the Sheraton Vistana Villages. And then we went to Walt Disney World. We stayed at the Polynesian Village Resort and went to the Magic Kingdom. It was amazing. It was one of the better vacations I've ever experienced in my life. And I want to do a lot more of that. So many people use dividends to achieve financial independence, retire early. That's on my list as well. But I also want to increasingly use dividends right now today to experience more travel like we did last week. And so that's why I'm going with higher yielders right now, because higher yielders can bring up cash flow in the portfolio right now that I can use for vacations in the near term. And I want to experience a lot more luxury travel. And so I want to start out today with SCHD. SCHD is the first one on the list. This will not surprise you because my last video was about SCHD. I will link to that in the pinned comment below. For those that don't know, SCHD is the Charles Schwab Dividend Equity ETF. It's an exchange-traded fund, and it's a higher yielder. It's really awesome. It's well diversified. It owns around 100 positions, and it basically tracks the Dow Jones 100 US Dividend Index. And so what's so funny about this is I prepared the video 2 weeks ago because last week I didn't want to work too much. When I was gone, I wanted to do my thing. I wanted to be at the pool or at the Magic Kingdom enjoying the time with my family. And so I filmed the video 2 weeks ago, but it's so funny. When I posted the video, I immediately got comments, "Hey, Ian, your video is great, but there's actually been some changes at SCHD. They reconstituted the fund. They changed the fund. They added some positions. They removed some positions. They did this because the underlying index change. It's an index. It changes over time. SCHD is trying to track the index." And this is fun because I originally was compelled to add SCHD to my portfolio because it doesn't have a lot of overlap. I own 50 stocks. SCHD has another 100. It would add a lot of diversification. But what I loved about SCHD is when I compared it to my existing portfolio, the overlap was only about 30.5%. And what was fun about my analysis when I did it in the last video, it was really broad. It was really with brush strokes. I did my best to understand if there was a lot of overlap. Well, post reconstitution, when I got all these comments in my last video and kind of my mind was exploding, I started looking at the top stocks in SCHD after the reconstitution. Check it out here on the screen. And I was like, this will be so interesting to see if my thesis holds up, if the overlap increases, decreases, or stays the same. And I'm gonna break the suspense right here. It's so fascinating. Overall, the overlap is really similar. It's only 31% with my existing portfolio post reconstitution. So my thesis stands up. I still love SCHD, and I'm glad it went through this because it shows me over long periods of time. Hopefully, even as they refactor SCHD, it brings something to my portfolio that I don't have. But as you can see on the screen, I was sweating it out a little bit when I first started looking at this post reconstitution. Because when I look at some of the bigger names like AbbVie, PepsiCo, you could see their Coca-Cola, you could see their Pfizer, you can see their Chevron, Home Depot. A lot of these stocks that they place a lot higher weight on that are bigger stocks in the portfolio of SCHD. I've got a lot of overlap with my own portfolio. But this time I did the analysis a little different. I went through every single position in SCHD. I looked at it. Do I own it? Do I not own it? I counted up all the yeses. I counted up all the nos. And when I got into the long tail of stocks that are in SCHD, I found there was very little overlap with my personal dividend stock portfolio. And net, when I added up all the numbers, it's only 31% overlap with the existing portfolio. And so I love this thing because it brings to me instant dividend yield, instant diversification, and as you can see on the screen right now, huge dividend growth rate. And so I want to share a few more things about SCHD, a few tidbits I didn't include in the last video, but one, I actually mentioned this in the last video. I love that it's only about 11% off the 52-week high. It's been weathering the storm really well. really, really well, which is amazing. It just shows the power of this thing. But what I shared in the last video, based on a trailing 12 months, the starting dividend yield is 3.65%. But if I look at the year-over-year growth of the dividend, it's hard to look at this thing because it has all these different components. They pay dividends on different schedules. So I can't just look at one quarter. But when I compare the last 4 quarters versus the 4 quarters before that, year-over-year, the growth of the dividends from this ETF was 16.6%, which is just fabulous. It's up there with probably my best dividend stocks like Home Depot and Starbucks. But anyway, if I project that they increase the dividend again by 16.6%, when I look at the dividend on a forward basis for this fund, maybe it's at around that 4% range, or even 4.26 as I project here. This is a rough estimate, but basically the forward dividend on this particular ETF, I believe it's higher than the trailing 12 months, 3.65%. It's probably more in the range of, say, 4 to 4.26%. And so that's where I'm at with this thing. It's solidly on my buy list. I plan on buying it sometime in the coming weeks, coming months. I'm excited about it. I'm going to use the dividends immediately for travel. It's going to be part of our ongoing travel fund because I want to travel more than ever before. I also love that even though I'm pulling dividends out of this to pay travel related expenses in the future, it's growing the dividends on average, say 16% per year. It's probably not going to continue that high. That's just looking at the last kind of 2-year comp. But even if it's anywhere over, say, 8%, I would be really happy with that. It's up there with the types of high growth stocks I own, like Starbucks, but the starting yield is a staggering kind of, say, 4.26 or somewhere between 3.65 and 4.26. Now, speaking of Starbucks, I mentioned I was on a vacation last week. I'm going to share a lot of photos throughout the video today of our vacation. It was so much fun. Maybe I'll share some stuff at the end of the video as well. But I had to get some souvenirs. And so for me, I got this one. I don't know if this is like a Christmas tree ornament or something. I usually just put these on my bookcase in my office, but I got the mini Starbucks cup here, but this is the special one from Disney that says Magic Kingdom. And so hopefully you can all see it there in the camera. It's really small, but boy, this was a fun little souvenir from my #1 dividend stock of all time. And boy, it was such an operation at Starbucks. I went to the Starbucks where I got this, was on Main Street of the Magic Kingdom. It was quite a busy place to be, but it was very effective, very efficient. And there are 2 branding giants out there, Disney and Starbucks. I really look at it as a match made in heaven when they both collaborate, and that the coffee shop on Main Street of the Magic Kingdom is actually a Starbucks. How amazing is that? Now, speaking of Starbucks, it doesn't end there. I got this little souvenir as well. This is kind of the Been There series. This is the miniature kind of coffee cup here from Florida. We love Florida. Shout out to all of my friends here in the community from Florida. Please put in the comments below if you're from Florida, but we plan to visit again many, many, many times because we love Idaho. But boy, it can get a little cooler here in the winter time. It's snowing and raining out there. And so boy, it's nice to get a little bit of a break in that Florida sunshine. So anyway, we will be back. But I want to go on to the second position. I have a lot to cover. This is the one that's going to shock all of you. So I want to talk about XYLD. XYLD is an ETF that I used to own. I sold it. Let me give you the history and let me tell you something that I think really helps me as a dividend investor and as a business person is I am willing to be humble and learn from my experiences. And I'll tell you, when I buy most of my positions in my portfolio, I have huge conviction. And because I have huge conviction, I understand what I'm buying. Like with Starbucks, I can buy and hold it forever. When I bought XYLD, in hindsight, when I look back at it, I didn't have the right conviction. I did not even have the right understanding of what I was buying. At the time, I think I was even projecting onto this position what I wanted it to be, but not really what it was. I was projecting onto it, hey, I want this to be a store of value as a kind of high yield savings account for cash positions. That's what I wanted, but that's simply not what it is. What XYLD is it's the Global X S&P 500 covered call ETF. As you can see on the screen in front of you right now, let me just go through the metrics. This thing has a staggering starting dividend yield. The starting dividend yield on this particular investment right now is about 11.9%. Based on the current monthly distribution, but based on the last 12 months distributions, it's 12.5%. Now, keep in mind, this is not qualified dividends like SCHD or like the other positions I'm talking about today. This is ordinary income, but nonetheless, it's a very high yielder. I think it's the highest yield I'm talking about today. And it's down about 19.2% off the 52-week high. And you can see a history of the distributions there over time. Basically, what Global X does is it owns the S&P 500, and then it writes covered calls against the S&P 500. And it generates income from those covered calls, and that income is distributed to unit holders or to ETF holders in the form of ordinary income, to my understanding. Now, when I originally bought XYLD, I was just kind of buying it, hey, this is a store of value and it's going to spin off a bunch of cash flow. But that's not what it is. What it really is kind of a different type of investment. I'm going to break it down into the 3 different types of markets. In a rising stock market where equity prices are gaining value, what it does is it will gain some equity value over time. Not a lot, but it will go up in value somewhat. And it will spin off cash flow, a lot of cash flow. In a sideways market, kind of like we're in right now, the overall price of the ETF, the unit price, will stay pretty constant, but it will spin off a lot of cash flow. I would say this is probably one of the best kind of investments for a sideways market, because as the market is going sideways, maybe with a little bit of volatility, it has a high yield and the equity is kind of holding its own. In a down market, this investment is expected to lose value. It's expected to lose value probably on par with the S&P 500, but some of that is offset by the covered call income that is generated from writing covered calls. And I would say in an up market, scenario number 1, this will not gain as much value probably as the S&P 500, but it will gain some value, but it'll pick up some of the difference as well with the covered call income that is spun off. That's what it is. I would say over very long periods of time, the best this thing will do, as you can see on the screen right now, quite frankly, with the chart, is it will hold its own. It's kind of holding on by a thread right now on the long-term trend line, but I would say that's the best it will do over long periods of time. More realistically, over long periods of time, maybe it'll lose a little bit of underlying equity value. It's probably more of an annuity type investment where the investor gets cash flow that is huge, that comes in monthly over long periods of time, but the underlying asset is not really going to gain a lot of value. At best, it's probably holding its value. That's my new understanding of XYLD. Originally, when I was looking at it, I was really projecting onto it what I wanted it to be, but that's why I love investing. I'm always learning. And when I read the book, The Income Factory by Stephen Bavaria, it kind of shed a new light for me on covered call ETFs. I want back in. I'll tell you another mistake I made with XYLD is I projected my recency bias onto it. Because I didn't have conviction in the investment, I had kind of weak hands, if you will. If Johnson & Johnson, the next stock I'm going to talk about, drops in value like it has, I don't lose one moment of sleep. I just keep buying. But when XYLD tanked all the way from $50 down to $40 or even the high 30s at one point, I didn't fully understand what I owned. And I just projected onto it my recency bias, and I felt that it would keep losing value forever. And that's why I sold. But now that I understand more about this investment, I realize that my recency bias and my lack of full understanding of the investment, it clouded my judgment a little bit. And again, this is why I love investing, because I'm always learning. XYLD, it's back on my buy list. I'm going to add to it. It's never going to be a huge position, but can it fuel expenses, especially related to travel right now? Like me, as you can see on the screen right now, going down that water slide at the Sheraton Vistana Villages, absolutely XYLD can help with that. And so it's back on my buy list. Put in the comments below what you think. Have you ever had one of these situations where you buy a stock, you sell it, and then you end up buying it back? Have you learned from those types of experiences? I would love to know. I know the world. I know so much when it comes to my blue chip dividend stocks that I talk about day in and day out, but there's areas of investing out there like covered call ETFs where I'm still learning. And so this has been an interesting experience. But with that, I want to keep going. I want to share the next stock. As you can see on the screen right now, I'm getting into the bread and butter of my portfolio. This one's really easy. My patrons already know this. I'm buying it probably almost weekly these days, but I want to add and continue to add. I have been adding to Johnson & Johnson. It's 18% off its 52-week high. I haven't lost a moment of sleep about it. In fact, I'm getting greedy when others are fearful. I'm excited with a PE ratio in the 14s. I'm excited that that yield is now almost 3%. I'm excited that they're growing the dividend on average by 6.1% per year. This is a mutual fund of sorts in the healthcare industry. They will be spinning off their consumer division, which is called Kenvue, sometime in 2023. I think this is trading down ahead of the spinoff, but I think after the spinoff, shareholder value could be unlocked. I think there's some risk with this right now, not only with them pulling off the spinoff, but also with some of the litigation risk around the talc powder and also the opioid epidemic. And so those are some items that are pushing the share price down. But I'm taking calculated risk that this stock and this company will be here to stay, and that I'm getting some solid value for my money right now. And now 2.9%, I think that's the lowest yield on my watch list today, but still for me, that's meaningful dividend income. Now, of course, I'm reinvesting my dividends on J&J. These first two, I plan to just almost open a net new brokerage account. I don't want to even mingle them with my existing positions. I purely am looking at that account from almost a vacation perspective, and I'm going to use the cash flow just to pay for vacation-related expenses. J&J, it's one of my favorite dividend stocks of all time. It's my number 2 largest position. That one I'm still reinvesting dividends. So will I really be using that higher 2.9% yield right now to pay for living expenses? Not now. I'm going to keep reinvesting that one, and I'm going to delay tapping into that one for as long as possible. But it helps because for all the money I'm reinvesting in J&J, it allows me to pull cash flow out from elsewhere. But let's keep going. The next one, as you can see on the screen right now, is Altria. I cannot pass this up. There is a new lawsuit against them right now, but they're always dealing with lawsuits. This is another one related to Juul, and they're 22% off the 52-week high. What I love about it right now is the PE in the 8s. I love that. I love the starting yield at 8.4%. That's meaningful cash flow I can use to pay bills right now. I'm actually reinvesting dividends on this one like J&J, but I could see myself sometime in the next 5 years using dividends from Altria. Probably not J&J, but I could see myself pulling out and using dividends from Altria to pay for vacation-related expenses. Payout ratio is 74.5%. They're growing the dividend on average by 6.1% per year. Look, at 8.4% starting dividend yield on a qualified dividend with a PE in the 8s, it just doesn't get that much better than that. And the fact that they're growing the dividend over time, of course, there is risk, just like with J&J, but I think the risk is certainly priced in to the stock. There's a little more risk with this recent Juul related lawsuit, but boy, they've been dealing with that stuff for decades. It's part of their business. And again, I'm not tapping into those dividends right away, but by having more cash flow in Altria, it makes me feel a little bit better taking dividends out of other stocks. And before I move on from Altria, by the way, there's a substitute I could have put in there, which is BTI. I own that one as well. I'll be adding to that one as well to keep the list just to 5 today. I didn't want to go into BTI in too much detail, but it's solidly on my list there with Altria. BTI is a reasonable substitute as well, and I'll be buying that one as well. And speaking of that, actually, the next one is kind of a double stock as well. Let's check it out on the screen. The next one I want to share that is on my buy list that I actually just bought a little. My patrons already know that. If you want to learn more about my Patreon, check out the pinned comment. It's Duke Energy. Duke is not that exciting from a valuation standpoint. It's probably trading at fair value with a forward PE in the 16s. But the dividend yield right now is a 4.2% qualified dividend that's really solid with a payout ratio of 71%. I could easily substitute the Southern Company for this, ticker SO. I only wanted to include one, so I put Duke. Look, there's a lot going on in our world right now. There's a lot to be fearful of, but when it comes to people's everyday expenses. What is the last thing that they are going to kind of turn off or stop paying? It's going to be energy. Everyone needs energy. Everyone needs electricity. Duke and Southern are regulated electric utilities. They're sleep well at night stocks. I'm reinvesting Duke right now. I'm pulling dividends out of Southern. Maybe I'll start pulling dividends out of Duke to pay for travel-related expenses, but I do have to kind of push that decision into the future as far as humanly possible. But if I had to choose, say, between J&J, Altria, and Duke, which one would I start using to pay bills right away? It would be Duke. And so those are the decisions that I'm constantly making in my mind as I think about the dividend portfolio, how I need it to grow for the future to eventually reach fire, but how I can start using just some of those dividends right now to enhance our family's experiences. And that's that. By the way, everyone, I have a Corner Patreon meetup on Zoom this Friday night. By the time this video goes live, it'll actually be the nighttime that same day because I plan to post this video tomorrow morning. But check out the pinned comment if you want to sign up for Corner Patreon, attend the Zoom meetup. It's going to be a lot of fun. Always enjoy the Zoom meetups over there. It is awesome. All right, everyone. This is my first video since I've been back from vacation. I hope it went smoothly. I'm still kind of getting back up to speed, back into things because we had so many good experiences there, and I'm kind of moving from vacation mode to real life mode to work mode. All of that. It's always fun stuff. All right, everyone. If you enjoyed the video, please don't forget to smash that like button. It means the world to me. Also, check out in the pinned comment, I just did a YouTube short about my experience at the Vistana Villages. Check out the pinned comment. I have a bunch of reels over on Instagram highlighting the fun vacation that we were on. And if you have any questions or thoughts about travel and what our experience it was like in Orlando, put in the comments below. I look at all those comments. I try to respond to most, if not all of them. Before I go in terms of a full disclosure, I own the stocks mentioned today, or I have them on my buy list. I intend to buy them. So I intend to buy XYLD. I intend to buy SCHD. I am long Johnson & Johnson, J&J. I am long Duke, DUK. I am long Altria, ticker MO. Also, I need to pull up this list from SCHD because I went through all of those. But before I do, my kids are long Disney, ticker DIS. I'm long Starbucks, SBUX. And I am long AbbVie, ticker ABBV. I am long PepsiCo, PEP. I am long Coca-Cola, KO. I am long Pfizer, PFE, Chevron, CVX, Home Depot, HD. I think that covers them all. Before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. I'm just sharing my journey. I love you all. I hope you enjoyed the video today. I'll see you in the comments below, and I'll see you in the next dividend stock investing video. And I'm going to share a few fun things from our vacation here and then my outro. Check it out.